Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the break below the 2052 support resulted in a liquidation move all the way down towards the 2033 to 2034 area, and at which point responsive buyers entered the market, and now we're getting a bit of a bounce just from a oversold condition. But at this point, the sell side is in firm control, and they can remain in firm control as long as ES holds below 51 to 53. So even though we can get a short-term bounce off of these support zones, the bias is now clearly on the downside, and it's going to be safer to focus on short setups rather than trying to identify and catch the bottom of this move, because the market could simply continue heading lower. The primary support on the day time frame is 29 to 31, but given the level of selling that we're seeing, that support zone doesn't necessarily have to hold. Now it is the bottom of the prior swing low and a big balance area that we reversed from, and that's why we're seeing a pretty decent bounce here in the overnight session. But it does not have to shut off the selling, and even though it can provide rotation, it can still hold. The risk now is on the buy side, and for that reason, it's going to be simpler to identify short setups on bounces back into resistance, because it's unlikely that the market is going to put in a V reversal and go right back up. Now, what makes this challenging today is that the market is quite oversold. We've gone basically in less than 3 sessions from 2100 all the way down to the 2033, 2034 area. So it's a pretty big move in a very short period of time, and because of that, we could get a bounce back up towards 51 to 53 even, and it would not change the overall market structure. It would still be bearish, and I think that's why the challenge of this is that the market is deeply oversold, which can result in a bigger bounce, and it's gonna be important to basically stay out of the areas where there is no inflection point. So, for example, pre-market support is 34.5 to 36.5, and then pre-market resistance is 46.25 to 48.25. In between, there's not a whole lot of edge based on trade location, and for that reason, it's going to be important to be patient and only enter at a key inflection point, whether that be a support resistance zone or a real-time support resistance inflection point like the VWAP midpoint or something like that. But at this point, the market is showing a lot of volatility, so there will probably be good setups on both sides. But given the level of selling we've seen, it's going to be simpler to identify short setups rather than trying to time and perfectly execute a long, because I think it is going to take better timing, better execution to get on board the long side, rather than simply relying on good location, like up at 51.53, or even at 46.25, 48.25, and taking a short setup, because I think you're going to get more edge just from trade location on short setups rather than long setups, unless we get stretched into a very key support. 29.31 potentially, although it's right below the overnight low, so it calls for caution. The strong support at this point on the downside is 10.5 to 13.5. Doesn't mean we have to get there today, but that's the next big inflection point on the downside. So I think just be patient with the trade setups today. Focus on the high quality setups where you can get bigger moves. So focus on the bigger inflection points, and avoid trading kind of the middle chop where there is really no edge and the market can go either way, because how oversold this market is, you can get a pretty decent bounce, right, like we're seeing right now. And for that reason, we just have to be patient even on the short side, but the short side still has higher odds of working out rather than trying to perfectly time the long setups. So those are our main thoughts heading into the open. Let's see if the sellers can hold ES below 51 to 53, and we'll take it from there.